Zoom has literally been zooming in the stock market lately, and you might be asking yourself, is it too late to get into this one? I'll let you know about my thoughts on that. Also, Gilead has tanked after its supposed failure on trials in China. I'm going to talk to you about potential opportunities involved in that as well. And finally, Intel crushed earnings today, but it tanked. Why? Going to let you know all that and more coming up. That's right, guys. So Zoom has absolutely been going bonkers over the last couple of weeks, from a $109 low all the way up to a all-time high of $181 as of this recording. It's been an absolute monster, and I told you that it was going to be about a month ago or so. Hopefully you guys heeded that one as well. But we're going to go over Gilead, what's going on there, what to expect, as well as Intel. I think this one is a little bit of a sleeping giant. I'll explain my reasoning as to why coming up. But first, I want to welcome you to this channel. Hi, my name is Brad, and this is Own the Chaos. The stock market is a crazy and chaotic place, and I made it my mission to help you own it. So if you want to see more content such as this, I would love it if you could subscribe to this channel, as well as hit that notification to get notified every time I put up a video. And if you get value out of today's video as well, I certainly would appreciate a good old thumbs up. Also, I just want to take a quick second to invite you over to the Chaos Crew. If you click join and be a member of this channel, what you will get for $4.99 a month is a daily watch list of mine. I put together a few stocks to watch throughout the entire day, give you some supports and resistance, as well as some sentiments. I think it's a great value. So if you want to go check that out, I encourage you to go check out the Chaos Crew. I'd be happy to see you there. All right, guys. So getting on to today's topic, Zoom shares had yet again blasted through all-time highs today after its inclusion into the Nasdaq 100, but has also been climbing, in my opinion, as we have seen some setbacks from Gilead, which we'll get to in just a second. And unemployment numbers continue to climb, as we have now seen them rise up over 25 million people without a job. And you might be asking yourself, how does Zoom benefit from this, and why does it continue to keep going up? Well, if you think about it from a fundamental standpoint, if there are people that are stuck at home, they can't go out, and we've been seeing Zoom all over the place, this is the way that people have been connecting, not only to be able to work from home, but just connecting to be able to talk to their loved ones. If you have family that are in separate homes, this is a great way to be able to communicate through a teleconferencing app that's simple and easy to use, and so it's just been used everywhere. So much so that the web conferencing app announced that it has now topped 300 million users, which is absolutely insane to me. But when you think about it, you've seen Zoom everywhere now. It's on mainstream media. Saturday Night Live has been using Zoom to host their live shows. It's been an absolutely incredible resource for people who are stuck in their homes and be able to still connect with the outside world. Which brings me to the question, is it too late to get into it now at $180 plus a share? And I would say that yes, unfortunately, you've missed your window of opportunity. I've been talking about Zoom and telling you guys to ignore the controversies that have been going around as far as security is concerned, and to not worry about that so much, because Zoom is going to continue to climb because of the amount of people that are actually using this app. Hold up, stop everything. Mark Zuckerberg just ruined this video right now. Kind of. So if you guys are watching this right now, I recorded this video before this news on Facebook came out, and I'm breaking this material event right now. And what has just happened, what has just transpired, what has ruined my video, Zuck, damn it, Zuck. I'm reading here right now, and it says Facebook introduced video conferencing tool and expanded live streaming features on Friday, capitalizing on a surge in demand for video chats during the coronavirus pandemic, while taking its first steps toward a planned integration of messaging products across its apps. The video conferencing tool Messenger Rooms will enable as many as 50 people to participate in a call, the company said in a statement. It will display a tiled layout of participant videos, up to 16 on desktop and 8 on mobile, resembling the design offered by competitor Zoom. Are you kidding me, Zuck? So here's what I was talking about, though. The opportunity for this thing to tank and to drop. Right now, it's looking like it's having that 50% retracement that I either did talk about or am about to talk about, and we'll see if this is the dip to buy on Zoom. I still like Zoom a lot. I think this is a much more professional program to use, and I would definitely stick with this one. So I think there's definitely a dip to buy on this. I would wait, though, at this point, but it's coming, folks. I couldn't have called this any better. I didn't expect Facebook to be the downfall of Zoom, but here we are. Thank you so much, Mark Zuckerberg and Facebook, for ruining this video. I guess just get back to the rest of it. However, if you did miss the boat and you're looking for opportunities to perhaps get in and not really follow all the fear of missing out bandwagon, I would say that there's definitely some good opportunities here for a pullback. Now, this chart reminds me a lot of what Tesla did back when it zoomed all the way up, no pun intended, to nearly $1,000 a share. Remember when that happened back in early January? I think we're starting to see a little bit of this on Zoom as well. This stock has been going straight up, and as we all know well, that never lasts. There's going to be some sort of drop off. And I would say that from its recent lows around the 140 area and how it's gone all the way up to 180, a 50% retracement would put us right around $160 a share. So we could definitely see just a technical rebound to that area of around 160. I think that could definitely be an area that you might want to look at if you really want to get yourself in the Zoom, even though I still think that would be high. But to the point of a lot of my viewers out there that brought concerns as far as the security issues, I would say that, yes, maybe there is some potential there as far as risk is concerned, especially if you're buying this high. I would say that if you're looking for opportunities, just be patient. Maybe I think personally that Zoom's been handling the security issues quite well. Really, honestly, really well. If I'm completely honest with you, I would say that Zoom is going to look at this issue in the rearview mirror and really never look back. Now, for those of you who might still be holding this stock, I have actually scaled my way out of it in anticipation of some sort of pullback. If you guys got back into the 116, 109 area when I was first talking about this being a nice run to 200, I called this out to going to $200 per share before the end of the year. I didn't expect it to go to the end of the month. So this is a pretty wild move. I actually scaled myself out, like I said, and I would say myself that I'm waiting for a pullback as well to perhaps maybe re-enter at some point. And I do think there's going to be some opportunities for Zoom. So if you missed it, I would say just wait, be patient. I think there's going to be some opportunities down the road for Zoom for you to potentially get in. I don't see this going all the way up to $200-300 per share in the near term. I think that we'll definitely see some pullbacks and some opportunities for you to be able to make some pretty solid entries on that stock. Next, we have Gilead, or ticker symbol GILD, which has had a wild 24 hours to say the least. We've had fake news, we've had real news. The Remdesivir is working, it's not working. So let's clear it up right now. What we do know, though, is that Gilead mistakenly posted its supposed wonder drug Remdesivir that was intended to treat the Rona and actually reportedly has some pretty positive results preliminarily. They came out and said that it has no benefit for treating the disease. Shares of Gilead were actually halted, if you can believe this, after the World Health Organization, or the WHO, actually published results from a study in China investigating the drug Remdesivir to its effectiveness in treating patients affected by the Rona, and they said it flopped. I mean, how do you do that by mistake? I just don't understand. The WHO, I think, has just been all over the place. They've done some things that are really, really good. They've done some things that really make you scratch your head. I don't know what's going on with the WHO, but Gilead was like, WTF, guys. After all that, Gilead then had to take to Twitter and make some sort of statement about this. They were quoted as saying, "Today, information from the first clinical study evaluating the investigational antiviral Remdesivir in patients with severe Rona disease in China was prematurely posted on the World Health Organization website. This information has since been removed as the study investigators did not provide permission for the publication of the results. Furthermore, we believe that the post included inappropriate characterizations of the study. The study was terminated due to a low enrollment and, as a result, was underpowered to enable statistically meaningful conclusions. As such, the study results are inconclusive, though the trends in the data suggest that a potential benefit for Remdesivir, particularly among patients treated early in the disease. We understand that available data has been submitted for peer-reviewed publication, which will provide more detailed information from the study in the near future." Now, last week we heard that this drug had positive results on patients that it was being used on in Chicago, and we saw the stock jump about 15%, as well as carrying the rest of the market with it. Now, when this news had come out, I had stated that this is something that you really have to be careful with. People were asking if it was too late to get in Gilead, and I had said yes at that time because we just weren't sold on these preliminary results. We have to get through trials, and that's when we'll really start to see the true numbers on how effective Remdesivir can actually be, and then we'll see whether or not if this can be used on a mass scale. But now that the stock has come down, this may actually provide a dip opportunity for you to get in. Within the next week, we should be getting the first completed set of data trials in the US, and that should give us a better idea of where this stock is headed. this could be your second chance at Gilead or GILD, but I would exercise caution. We do have these trial results coming in next week from U.S. trials, and I think that, we'll have a much clearer picture, but I just want to exercise caution, because if they don't do well, if the same results that we got from China happen here in the U.S., I say that the stock could continue to come down. So if you're looking to take a chance on Gilead, if you do see value in there and you were really upset that you missed the opportunity before, I would say that now definitely is. I think that $75 range is certainly a good area for you to potentially get in at. But again, like I said, exercise caution. Make sure that you're watching this stock like a hawk and keeping up to date on all of the news as far as these clinical trials are concerned, because that is what's going to move this stock. Okay, finally, we have Intel, which crushed earnings today, but then had a poor outlook, so then the stock tanked. And now people are coming to me asking me, hey, is this still something that's worth getting into? Should we be buying the dip on this thing? Well, I'm going to let you know that in just a sec, but first, before we get to that, I just want to invite you over to my daily mentorship. If you haven't checked that out over at WeTradeHQ.com yet, or if you haven't clicked on the link down in the description below, I would love to have you over there if you're looking to learn how to trade or invest in the stock market. It is a great community that we have built over there. People are learning and growing and celebrating each other's success. So if that's something that you might be interested in, again, I would encourage you to click the links below. And right now I'm offering a free 30-day trial. If you want to go to checkout and enter the promo code STOCKS, that's promo code STOCKS over at checkout by going to WeTradeHQ.com, you will get a free 30 days of my daily mentorship at no risk to you. And I don't know, I just wanted to extend that to people because we're all stuck in our homes. You might as well learn how to make some money while we're sitting around. And so if you want to go check that out and get your free month, I would love to see you there. Now back to Intel. Intel crushed first quarter earnings at $1.45 per share, beating expectations from the street that was at $1.28. And then the stock tanks. Intel pulled their full outlook for the year of 2020, and that supposedly spooked investors, but everybody's been doing that. They also provided a second quarter outlook expecting earnings per share to be around $1.10. We'll see. I don't know if I really buy that, and here's why. I still think there's strength here, and I consider Intel very much a buy. And if you're a part of the Chaos Crew this morning, you saw that I was calling out the gap fill here as it tanked. I told people that it would be a really good buy to get in right at the open, as this gap looks like it should fill. Sure enough, it did. People in the mentorship made bank on Intel as well. But I think for a long-term approach, this is going to be still very much a buy. I've had this theory that I've been talking about on this channel for the last couple of weeks about people staying at home and not really going back out even when they are allowed to. I think that, I don't necessarily think that companies are going to force employees to stay at home, but I think there's going to be a much deeper conversation about being able to work from home on the reg. And I think that that's definitely going to be a thing. That's why I like Zoom for a long-term investment. And, once that pulls back, I definitely will be getting back into that. I like AMD. I like the Intels. And also consider this. As we all know, Intel makes computer chips, right? I have one in my computer as I'm recording this on right now. And according to the NPD, sales of computer monitors doubled in the first 2 weeks of March, and PC sales rose 10%. And the reason for that being is because we're all in our homes and we're all working from home, or we're all trying to communicate with each other on Zoom, via computer, and so I think there's a lot of reasons why people are buying computers and monitors. You could be trading, you could be playing video games, whatever. And I think that the demand for computers is actually going to continue to rise, not fall. And I think that Intel is definitely a sound investment moving forward. I think AMD, NVIDIA, all of these chip makers are still going to do well despite the recession, because people are still going to have to work at some capacity. And I think that even like I said, when we're allowed out of our homes, there's still going to be a large percentage of people that are going to be like, wait a second, I really enjoy working from home. I was able to hang out with my kids. I didn't have to spend money on daycare, this, that, and the other. And I think that the world's going to look very different moving out of this recession once people are allowed out of their homes and allowed to go back to work. Of course, I think demand will go back to the normal way of living to some extent, but I think there's also going to be this degree of these stay-at-home employees that are going to be like, I really like what I'm doing right now. this should stay this way. Therefore, I think companies like Intel and like Zoom and all of your stay-at-home plays are going to become even more relevant as we move out of this situation that we're in. But now that I've gotten all of that out of the way, I certainly would like to hear from you. So leave me some comments down below on your thoughts on today's topics. And if you have other ones to share as well, I would love to hear from you. I'll reply to every single comment down below. And guys, that's going to do it for me. So if you like today's video, if you got some value out of that, I certainly would appreciate a thumbs up. And if you would like to subscribe, I certainly would appreciate that as well. Guys, I hope you have a fantastic weekend. I'll see you for Stock Watch Sunday at 8:30 p.m. Eastern Time. And as always, folks, I will see you all before the bell. And B. Smith is out. What's going on, everybody? So yes, today we're going over the top 3 underrated stocks that I think are being seriously overlooked and have some really good potential. We've